everybody? Welcome back to Bullseye Finance. It is Friday, February 26th. Coming at you hot from my room again. Nick, how you doing?
Doing good, Michael. It's always good to be back in your room. Mike has the biggest room, so it's the best area to shoot the videos. So,
well, I think it's no surprise to everyone listening to this that it was a pretty rough week on the markets.
Very volatile this week, you know.
Yeah.
The indices jumped around this whole week. We know that the Dow and the S&P did end down on Friday today, but we saw that these tech stocks and the NASDAQ did jump up and kind of recoup their losses. So there's a lot of worry right now into the market, and we know Jerome Powell spoke earlier in the week. We saw some big dips on Monday, but then we saw a big rise and then another big fall today. So consumers are a little worried about where interest rates are going to go and how inflation is going to impact the markets going forward, as we've seen a lot of stimulus being passed and talks of more stimulus. So some people are uneasy right now. We have to watch the bond market. We've seen that fluctuate a lot. So we'll see what the Fed does here, and hopefully consumer sentiment will remain high, but we are seeing some fears from possible inflation in the future, Mike.
I think everybody just needs to take a deep breath and relax. I think this was kind of inevitable from when we were trying to recover from the coronavirus and we were just printing money like crazy. The repercussions were going to have to come at some point, and we're starting to see that now a little bit. But you know, the market is going these breathers it takes, and these little sharp declines are necessary in order to have a healthy market.
Yes, of course.
You know, we'd rather see this than it just go up for months and months and months and have a massive drop off at one point. You know, it needs to take breathers because it's a marathon, not a sprint. You know, so I think everybody just needs to relax. We're getting some dips right now, but that also creates a great opportunity to go shopping, put some buys in, and set yourself up for success in the future, because we will rebound. You know, I don't know that for a fact. Nothing is a fact.
But in the America, you will, in the long run, you will inevitably rebound. Unless the world is going to end, I mean, I can say with 99% certainty that the America's stock market and the economy will rebound at some point. But
so just take this as an opportunity to get in some good positions. Do you have any good positions that you want to talk about, take advantage of?
Just to take on your point what you just made about, when the market does take these breathers, it's kind of funny because we see a lot of retail traders. It's a lot easier to trade now. The zero commission fees. You have apps like Robinhood and Webull where it's just easy now to trade, whereas 5 years ago it wasn't. Like you said, when these market takes breathers, it's funny because you see a lot of these retail investors and the younger investors pulling out their money right away because they've really only gotten into it since COVID at its lows in like March of last 2020. So when they see these breathers, a lot of people are pulling out their money. So it's kind of interesting to see.
Yeah.
But like you said, try to find some good buys. Try to find some value companies because a lot of these hype stocks and these momentous stocks won't rebound as well. And we know from the Great Depression, it took 27 years for it to actually rebound to where it was. I don't think we're in that type of economic situation, but it's always important, to just know that it could take longer than you expect to rebound. And if there is a correction coming or a crash coming, just know that it's going to be there. But cost average in, put $100 to $1,000 in every month into high value stocks that you believe in. So
just one more thing to put on top of that is if you're looking at the chart for 1 week, it looks pretty sharp, but if you zoom out and look at it in a year or in 5 years, it's nothing. It's like a short. So you got to think long term with this.
One thing Mike wanted to talk about, he asked me earlier, I kind of cut him off, was some good value plays that I see right now. And if I'm going to be honest with you guys, I don't really say I can recommend anything right now. I think that it's a great opportunity to get into stocks right now. Some stocks have taken 14% dips, some really good ETFs. I know Apple's been on almost like 17% down in the last couple weeks. And I do think that the tech sector has really hit some lows since it was really overvalued, but it could be a good time to get in. But I think you got to be careful right now. I think you got to be smart about your plays. And if you do have these a lot of money in momentum stocks or kind of new startups, you're only going to get 1 for 10 of these really making it. So just make sure you're investing in high quality stocks, high quality ETFs, because in times like this, you don't want to really be risking too much when sentiment starts to get a little bit uneasy. So that's only my piece right there. But
one thing that adds on that is something that's really big and that we really believe in is averaging down. So we don't know if it's going to continue to go down. We don't know if it could rebound next week. So one strategy is to average down, which basically means as the stock is taking a dip, you're slowly incrementing, building your positions in that, because you don't know, no one's going to be able to time the market perfectly. No one's going to say it's going to drop all the way to this point, and then as soon as it gets there, it's going to go back up. I'm going to buy it as soon as it's at rock bottom. No one knows what's going to happen. So the best way to combat that is to just slowly, incrementally average your way down.
Yeah. Ray Dalio, who runs Bridgewater Associates, one of the biggest hedge funds in the world, in his book Principles, he has a quote that I think that really hit me and struck me hard in the head, is that those who live by the crystal ball end up eating shard glass. And I used to, like Mike said, I used to try to time the market. I thought I knew, I can day trade this, I can do this. No, you can't, because if people could, they'd be the billionaires. But it's the people who have in there for the long run, who buy correctly valued stocks for long-term growth, are the ones who are making all the money. So, like Mike said, average down, put money into good ETFs. Vanguard has a lot of good ETFs. The NASDAQ QQQ. There's things that you guys can be buying. The VGT, which is Vanguard's tech fund. There are things that you guys can be buying and averaging down, so that way when the spike comes back up, you're going to be averaging up, and then you're going to see your gains explode in the long term. And when you're 50, your portfolio is going to be massive. It's not about now; it's more about the future with investing. So,
yeah, I think we touched on a lot. There's not really much else to talk about other than the fact that hopefully we will rebound from this. Any words that you guys say?
Yeah, I think, like you said, not much going on this week, really. I think we have to watch what the Fed does, see what the talks with interest rates. I think they're going to remain where they are now, basically at zero, really low, but there is some talk of them raising, and that would change kind of the market for that matter. Bonds have been bouncing around, and see what Janet Yellen's planning to do about more stimulus. That could also affect the market. So right now, I think we're still in a good spot, but there's a couple moving pieces right now that we need to watch in the weeks to come to see what's really going to happen here. But yeah.
Yep. All right. Thank you guys for watching. We're going to upload this on YouTube. You can also find it on Apple Podcasts and Spotify. Thanks for listening.
Thanks, guys. See you next week.